Good evening. My name is Adam Cavalier, and this is my full sail Assignment 3 Wyndham Destinations Market Recognition Proposal. So let's jump right in. Let's go over what this presentation will include. First, it'll include some stock data for Wyndham Destinations. It'll include a Wyndham analysis, correlation analysis, whale tracks, support and resistance, Bollinger Bands, suggestions, and of course the future for Wyndham Destinations stock. So let's talk about the stock for Wyndham Destinations. There's a 2.4 million volume. That's how many stocks that there are. Period. The ratio is 6.05, which is way below average. The average for hospitality is 17. They can go as high there as low as 17 and as high as 22.5. So it's not good because it's low, but it's not bad because it's said that a high PE can also scare off shareholders and push your price down. Opening price for Wyndham today was $43.23 and the closing was $43.26, so a small bump. We've seen as high as 47 in the last 52 weeks and as low as 33, so it's kind of all over the place. So let's talk about the analysis of Wyndham. I put some really interesting thoughts because, and we'll probably touch this a little bit more on this later on. But again, the big deal is that Wyndham Destinations has a lower PE ratio when compared to other hospitality industries, such as Hyatt or even Disney. The good news is that a high PE can scare off shareholders and push the price down, but again, a low one can also cause issues. Wyndham Destinations does have a good value based on earnings. It does have very good earnings. They also have a really good value based on their expected growth for the next year. They also are struggling in one of the negative sides. So they have a good value and they have a good earnings and good value based on growth, but they also have a massive debt cap of 136%. I think that's where the risk comes in. I think what we're talking about when we look at Wyndham is, according to the experts, which I'm not an expert, but according to the experts, if Wyndham Destinations can overcome this market expectation, we can see a potential rise. If not, we're probably going to see Wyndham's Destination stock potentially fall for a little bit. So let's talk about the correlation analysis. Wyndham Destinations actually has increased 5% year-over-year revenue. I put in two really cool charts from NASDAQ and the Motley Fool that show a 50-day or 1 year out chart for Wyndham Destination stock, and I really wanted to focus on how in the world we dropped in October but then skyrocketed in November. So I really focused on what happened there and made the correlation analysis there because, again, I'm not a stock expert, but I was interested in why it was such a steep decline and then a steep rise. Well, what happened is they released their May earnings, and they had that 5% increase. They had a $1.1 billion revenue. In May, they also sold off their European rentals business and broke off from Wyndham. They increased in revenue again after that by 10%. Their operations revenue increased by 28%. Their timeshare sales rose by 7%. And of course, Hurricane Michael and Florence had no effect on any of their destinations or resorts. So that caused no cost to Wyndham, which also increased their share price. So let's talk about whale tracks. It was very difficult for me to, after doing some research and trying to figure out what whale tracks are and then trying to figure out if there really were any whale tracks, I really focused on the 1 year mark because I started looking at month to month and week to week and 52 weeks and 3 months, and I just wasn't finding what I understood to be whale tracks. So I chose between April and May, to talk about a little bit of a whale track. It's not incredibly long, and it's not a huge whale track, but it looks like between April and May, the share was at least as close to a whale track as you could see, where people were buying and selling for a minute, and then it dropped again from May to June. So that's where I considered whale tracks. Support and resistance level. This is another one that I found to be somewhat hard, because what was interesting is that Wyndham is up and down, very sporadic. We're not seeing steady growth. We're not seeing steady falls. We're just seeing slight rises, and then a dip, and then a little bit more of a rise, and then a dip, and then a little bit more of a rise, and then a heavy dip, and then a little bit more of a rise, and then a heavy dip like you saw in June. It's very weird. However, I've seen some support between May and July. You can see somewhat support, then obviously resistance heavily between April and June. So I made some Bollinger Bands based on the data from Yahoo Finance. And this is an interesting line chart, because it actually was a little bit easier to decide on how I felt about Wyndham stock after doing this. When compared to looking at NASDAQ and Reuters line charts, it was just getting to be, not being a stock expert, it's actually a little overwhelming to try to figure out if it's even worth buying or selling or holding, because everything was so sporadic. But I think that as you see things getting closer and closer between between 4 and 5, month 4 and month 5, that's when we really see the chance to sell, which is why I would say that in the future, I've included, I know we saw this earlier, but I have some other ones that I'm going to include too, that you have to remember that Wyndham Destinations has really good value based on earnings. They're also expected to have incredible growth, and they've been showing that Wyndham definitely is meeting and exceeding the bars that's been set for their goals in the hospitality growth industry. However, and again, Wyndham Destinations is a good value based on expected growth next year. However, according to my Bollinger Bands, I really think that right now, your choices are either to sell or to hold out and then sell. I don't think buying Wyndham stock right now is worth it. I think it's too much of a risk. And let me show you some other reasons as to why. It's been Wyndham's year-on-year earnings growth rate has been negative over the past 5 years, and the most recent earnings are below average according to this chart compared to other places in the hospitality industry. If their 1 year earnings growth is negative, which I don't think it's going to be, but again, I'm not an expert, so that's just making a projected guess. Because they've been growing so much at such a steady pace, and we haven't had any disasters that have affected them, I do think that they're going to have positive growth in the next quarter, which I think could potentially stimulate, which is why I said selling would be a really good idea. But we're not really at a point in which the share price is low enough to really buy. I think if we have Wyndham stocks, now's the time to prepare to sell, but not to buy, or to hold on and then sell. I've also showed the annual growth rates, which is major in earnings but slow in revenue. So that's why I say I think because there's no natural disasters, we're going to see the earnings continue to rise, because they're not going to have any major costs. So that's why that's my presentation on the Wyndham Destinations stock. Again, I am not a stock expert, but if I was to invest, I would, or have already invested, hopefully I would have already invested in Wyndham Destinations, because that is the company I'm using for my capstone. I would be holding and then selling, or selling with looking for other investment opportunities and holding out for when the next share drop is, and then buying up some more. So thank you guys, and I hope to see you for the next project.